Ladies and gentlemen, we got spanked last week by the RBA, so we thought no better opportunity to bring on the expert, Zach from Shaw, to talk about how you can make life a little bit easier for yourself. Stay tuned.
Good morning, gentlemen. Now, I like to consider myself quite a savvy person with my money, but it came to my attention over the weekend there is savings to be made, even in the recent rate rises. So we've got Zach on to tell us a little bit more. How are we?
Morning, guys. Well, thank you. Yourself?
Very good. I love an extra day off. Long weekend.
Hey, Zach, you're looking a bit suave this morning with podcast, studio, background, hair, glasses, beard. You got it going on, buddy.
Thanks, Mark. I thought I'd turn it on for you, mate. It's a bit of a hard task to beat you in the range there, mate.
It's good for all our lady customers.
Great for the views. Comment. Great for the views.
What are we talking about this morning, guys?
But yeah, it's a big one. I was watching. Yeah, what's about you? I was watching the news last night, and yeah, it turns out there's a few Australians that are going without, knowing that there's money to be saved. I think I'm one of them.
Yeah, well, I think a lot of people have obviously seen all the hype in the media. And Mark, I know you did a segment last week about if it breeds, it bleeds. There is a lot of hype about the interest rates and how tough it is for some as they're being passed on through to the banks. So in terms of savings to be made for people with a mortgage, there's definitely avenues to smash the mortgage, so to speak.
You know what? I think also there's good posture and bad posture in finance, in your body, in your work, in that sort of stuff. And I think that you could take Tuesday as a bit of a blow, and I think a lot of people did, where they were like, shit, far out, like it just, and you can create as a result out of something like that, you can sort of work yourself into a hole. But I think if you take the high road and take a position of educating yourself, knowing what you can do, what is within your power, I think then you can make some really nice chisels, some nice inroads to, a tough situation. So I think right at the beginning of these rates going up, if you can teach us just even just one thing or two things about good financial sort of posture and what we can do in terms of a couple of little systems, that's going to help people all the way through, because it sounds like it's not the last rate rise.
Yeah, that's right. And I mean, the banks have passed on preemptively before last Tuesday, and there is the schedule for at least Westpac to pass on the other rate rise on the 21st of June. So we'll see some more movement in variable rates. But I guess for people with a mortgage, one of the easiest things to do is look to your lender and see if you can switch your repayments to a more frequent repayment. Might not change the amount per month, but it will certainly reduce your interest, because the interest is calculated on the balance remaining. So if you're making fortnightly payments versus monthly repayments, that's an extra repayment a month that's coming off your principal, and therefore interest has been calculated on less. So it might only be, $500 over the life of the loan, but it's something to start off with. And I guess from there, you can even look at making additional repayments.
Yeah, I love that, because some of these tips here are not necessarily, you've got to earn more to pay off your mortgage quicker. It's small changes that you can make that will just help in the background, right?
Yeah, absolutely. And like another thing to consider is that a lot of mortgages in the last 3 to 4 years since the Royal Commission have been stress tested for, additional interest rate on that mortgage. So these people have proven to have the disposable income. So it might just be as simple as curbing your disposable income expenditure such as having a coffee at home or, not eating out as much. I think, Mark, you've touched on that previously, which is generally a smarter move.
Yeah, I think it's going to be an environment of essential purchases and essential sales only, where probably we've gotten a bit fat the last 2 years because the government's been pretty happy to hand out money and to get into debt to keep the wheels turning. But I think, it would just be really irresponsible for that to continue. So I think to tighten the belt a little bit for all of us is probably a better country, and that's what's sort of happening. Although it makes some people a bit angry or a bit stressed or whatever that is, it's probably a better thing for our economy. So you're right. Just there are a lot of little pieces of fat that can be trimmed away from what people are doing, and people have bought a lot of stuff in the last year or two that is just unnecessary. Like I hear of customers and friends and stuff, and you think that's not essential. So it's back to essential.
Yeah, for sure. And I mean, there's also a bunch of lenders offering refinance cashback deals. So that could be money in your pocket if you refinance with one of these lenders, and you potentially stand to see a better interest rate. So that, again, is another opportunity for people. There's a bubble at the moment, people who are fixed for 2 and 3 years, which are all coming off their fixed period and looking to refinance. There's definitely a better rate out there than what you'll be rolling onto with your existing lender. And there could be a cashback as well. So extra money in your pocket from talking to someone like me and refinancing.
Zach, do you see the savvy sort of people refinance more frequently than the not savvy people? Because I see Luke's just mentioned refinancing is key. You find the clever guys are doing that, guys and girls?
Yeah, well, there's a sweet spot, anywhere from 2 to 10 years, depending on who you're with. But generally, there are internal rises that are factored into your loan once you're locked in with the bank. So, if you're fixing for 2 years and it's a better rate than anywhere else, then once you come off that, the chances are you're going to find a better rate somewhere else. So that's exactly what a lot of the savvy people are doing, is writing those 2 years or at least their fixed period, and then coming off and refinancing. But again, fixed rates at the moment, they're starting at 3.69%, whereas the variable we're seeing at 2.19. So those savvy people are going variable at the moment, and they're going to weather the storm and just ride the wave of the variable because it's still considerably more competitive.
I've got one for you, Zach. What about are people making one-off payments towards their mortgage? I read a nice little one was obviously end of financial year coming up. Maybe if you've got that little bit of spare money, putting in your tax return if you get some against your mortgage.
Yeah, well, that's definitely an opportunity depending on the way that you've structured your loan facility. Variable loans can have an offset account. Some fixed do have a redraw ability and an offset ability. And by that, I mean you can make extra repayments against your loan, which does reduce the principal and therefore the interest amount that you're charged. So, I mean, the best case is that you have a 100% offset account, which means that 100% of the money or your savings in that offset account comes off the principal of your mortgage, and then you're only paying interest on that amount after the difference. So if you got $500,000, then you've got $100,000 in savings, you're only paying on a $400,000 mortgage the interest.
Yeah. And are you also recommending to clients to pay if they've got the capacity to, contribute a little more each month on a regular basis?
Look, that's for the most frugal and the most of the savvy investors. I mean, it comes down to personal preference at the end of the day. If you service, then you can make those repayments. Then, if you have a personal goal to pay off your mortgage sooner, that is obviously the best way to then build more equity in your property so that, any capital gains, you're taking the maximum amount.
Yeah.
Should you pay, or if you got say you got $5,000, should you pay that off the mortgage, or should you keep that for a rainy day for your mortgage?
You can do both. You can keep it in your offset account and you can access those funds in the event of an unforeseen or a rainy day, but it can also be used effectively to offset interest on that amount of your mortgage.
What if you don't have an offset account?
So you can also have the redraw ability, but again, if you don't have either of those and you don't have the ability to actually make extra repayments, then you're going to have to keep it for a rainy day. But I mean, there's other options for savings. ING and Macquarie Bank have put up their savings account rates, I think, above 2% for amounts under $100,000. So that's a great opportunity for people to capitalise on holding money in savings accounts.
It's been a while since we've heard any of that sort of stuff.
Hey, that's come up a little bit.
It has.
Not all dark. But are you finding people that don't have offset accounts set up and saying you're crazy, or is there often a reason?
Oh, look, a lot of people do have offset accounts now that I'm seeing, for sure. In recent times, I haven't seen someone not take on an account with the ability to make extra repayments, because everyone wants that flexibility.
Yeah, and like Mark said, you can sort of keep that money for a rainy day, right? It's not all
exactly
tied up.
I thought offset was just for the rims on your car.
Depends what you drive.
Shit. All right, Ben Cove, what's he got to say? Ben, you legend.
Refinance after substitution of security or new home loan, which negotiates. I think that's going to be maybe a better rate. You got
refinance after substitution of a security or new home, which negotiates a better rate. Give me a call, Ben, and we'll sort out your scenario.
Oh, that was the salesperson answer.
There's a plug.
That was the salesperson answer. So a refinance after substitution of security or new home loan, which depends what you're
looking to do. If you want to substitute that security, and I guess there's been capital growth in a lot of places in the last 2 years, you can refinance, take some cash out, and again, that can be used for personal use, investment use. If it's investment use, you probably get a new home loan with your new purchase. But it really depends on the security and the LVR you're seeking. So higher LVRs and heading into that LMI territory will be different to if you're, say, refinancing on something that you've got significant equity in.
Is there any other the savviest of the savviest are doing, but no one else knows about, Zach? Things that we have today?
I guess just to touch back on Ben's question, new home loans, the banks love new customers. There's introductory rates floating around at the moment for clients who haven't been with that lender before. Again, it's a case-by-case thing that we'd explore depending on the person's scenario.
Okay.
How big can those cashbacks be?
Oh, it varies between $2,000 and I think there was one lender that was at $10,000. I think the average is around $3,000 to $4,000 with a lot of the majors, but yeah, there's ones that are up there.
That's a whole lot of cash.
I could buy a new car with that, Mark. That's amazing.
Yeah, so hang on a sec. Do you have to? So that's tax-free, is it?
And it depends on your LVR. There's a bracket. You wouldn't be going above 80% LVR. A lot of them do have triggers for minimum loan amounts and the actual LVR.
That is a lot, eh, Billy?
Yeah, that could get me to Hawaii, or that could get me a new car. That's very tempting.
So many options.
But what's interesting for me though, Zach, am I right in saying that it's not a bad thing to switch banks? It doesn't harm your credibility or change it up when you're not getting the best rate?
No, not at all. No harm done. You're total free will to be changing and jumping around to seek what's best for you.
There you go. So if you're not getting the best rate, I think that's the biggest one.
Brent says we sold and bought and reduced a home loan by 200 grand and only have 30% LVR. Yeah, see, that's pretty solid. A lot of people doing that these days, particularly people that are moving a little bit further away from CBDs. A lot of people that have left, say, for instance, Northern Beaches and have gone to, Newcastle or further up, they've reduced their mortgages by significant amounts because work allows for it and work didn't allow for it before. Pretty interesting.
Yeah, that is interesting.
Hey, Zach, I've got a question. This is probably a hard one for you to answer, to be a diplomat, but how frequent, if you had to name a year without dancing around 5, 10, 24, or whatever, if you could choose a year, a number, how frequent would one have to be sharp on their interest rates, to be sharp on their lending, to be sharp on everything financially with their mortgage? What would be the number that I'll ask it this way, what number would you hit? Would you be refinancing every 3 years? Would you be refinancing every 7 years? What would you do if you were the savvy, of course you are, but the savvy lender? When would you be looking at your rates and doing an overhaul?
I'll make sure to bring the crystal ball for the next session, Mark, but I'd say every 2 years.
Wow, every 2 years.
I didn't expect that. Wow, that's savvy. Yeah, right. Okay.
Well, by comparison, if you had have asked me the same question 2 years ago, I probably would have said 4, because people were able to fix on rates as low as 1.99% for 4 years 2 years ago. And that same rate, that same lender is now 5.6% for 4 years. So it's,
Wow. So they sucked him in at 199 and then they socked him at 5.5 or something.
Well, no, those people who fixed for 4 years at 1.99 will be on 1.99 until the end of 2024. But if you were to go for a 4
to have that crystal ball.
Now, it's crazy. So, every couple of years, it's definitely good to talk to your broker and have a look at what's out there. I mean, if you're a business or you've got multiple investment properties, you've probably got a good accountant as well. They should be doing annual reviews to let you know what position you're in as well. So talk to your accountant, talk to your broker every year, every couple of years to make sure you're getting the best deal.
And do the banks
work done at work if you're refinancing all the time? It takes so much time out of your life.
Well, thankfully, that is my work, so that's all good.
But Zach, do the banks love people that have heaps of money, heaps of investment properties? Or do they just like the steady investor, someone who's a little bit more safe?
Again, it's a case by case. There's people who have a portfolio of investments on, a very modest salary and they're paying interest only on their loans. So they're not paying any principal. There's probably a certain threshold that most lenders will take of those types of investors, knowing that there's not much principal or if any being paid. Whereas, there's people with money who are using their money to make more money through property, who, the banks will have much more of an appetite for.
Well, there you go. Anything else, Mark?
Oh, you know what? Yes, but we're running out of time.
What about a quick weekend recap, gents? How are the markets? What happened?
What, the fish market?
Yeah, well, if
the
you went to the fish market,
were pumping. They were pumping. They went crazy. My daughter was there, bought a great meal, ate like a queen with a friend of hers, and spent $60 and ate really, really well. Fish markets. What did you get up to?
Good stuff. Just a bit of admin around the house and a couple of surfs, Mark. Enjoyed the sunny weather. How about you, Bill?
My highlight was season 6 Peaky Blinders, and back-to-back episodes of Love Island, guys. 4 of them in a row.
Mate, you're going to get a nomination from me for that next season for sure.
Yeah, a couple of the boys would back me, they reckon. I said, like, you know,
I reckon you do well.
Well, you go up against a few, like, good-looking roosters, right? But even if you get last place, I mean, all the girls are stunning. So it's a win-win, in my opinion.
That's it. Who were the winners over the weekend in the real estate world, guys? Did you have a good one on the Saturday? What was the long weekend like?
Yeah, big numbers, actually.
Yeah, the numbers are back. And again, it's the essential purchases and the essential sales that's happening, and there's plenty of those. So yeah, people are. I think the uncertainty's left people. They're not teetering left or right. They know the government. They know the rates are going up. Let's get on with it. But that uncertainty period of a couple of weeks ago, everyone's like, I'll wait. But it's pretty solid now.
Yeah, cool. That's good.
That's a wrap. That's the show, guys.
That's a wrap, ladies.
That's it.
Have a great week. Short week. Have a great week, everyone.
You too, gentlemen.
And Zach, thank you for coming on. We'd love to get you on again.
I'll be back whenever you need me. See you in a couple of weeks.
Are you like the most attractive broker on the northern beaches?
Oh, that'd be a self-assessment for sure.
Maybe we can run a vote for the ladies next time we come on.
I like the idea of that.
Pass it through my other half, Mark. I'll let her know what her vote is.
Actually, you know, Shore Financial is full of like it's like it's a bit like a modelling agency for brokers as well, isn't it?
Much like the Novak agency.
Yeah, just attract good-looking people. But on a serious note, well done to you guys. And part of just so anyone who's watching who doesn't know, the four Shore Financial guys have had a stellar rise in their business from starting their business relatively short time ago to now, and full of a bunch of super smart people. And if you are keen, look these guys up. And we love Zach because he's a good bloke, and he's also from DY as well. So anyone who needs his assistance on the northern beaches, you're the man.
Reach out, guys. I'm here. Thank you, Mark.
See you, everyone.
Cheers,
Take care.
guys.
Thanks, Zach.
Have a good
Thanks,
week.
Billy Boy, Billy Bob. Bye-bye.